This week on Sylvia's Traders Lounge.
So when you quit your job, your paychecks stop coming. So you need to have, a backup plan. So this is the number one reason I dabbed into day trading, and I dabbed into day trading about 19 years ago. And the reality is that day trading is an income producing style of trading. The reason for that is that you get in and out of the market within the same day. Actually, I go for high momentums and high velocity moves. So my timing in the market is not more than 30 minutes into a trade. So about 30 minutes average, it would be about 30 minutes into a trade, because I look for wider targets. I look for, bigger, a little bit bigger time frame that will correlate to my smaller time frame that I trade in.
Thank you guys for joining us to today's webinar. We hope that you're keeping safe in this third wave of COVID. Sylvia's Traders Lounge welcomes you all to yet another webinar where we learn, trade, and profit. We shall be giving you trading insights on technical analysis, fundamental analysis, risk management, and trading psychology. Today's guest is Anka Metcalf, and our theme is swing trading stocks, part-time trading, full-time investing. Anka Metcalf is a professional trader with 20 plus years of trading experience in stocks, futures, and forex, who spent over a decade working in investment banking prior to becoming a full-time trader. She is the founder and CEO of TradeOutloud.com, an international trading education and advisory company designed to help any level trader fast-track their trading and achieve their trading goals. She's an expert day trader, swing trader, and an active investor with a precise approach to daily income style and wealth generation trading, delivering results in any market environment. The strategies she teaches in her courses and her live daily approach to trading provide you with the understanding and the tools to take to your trading to the next level. She personally manages her own trading accounts and shares her market knowledge and trades live every day with her clients worldwide. She is a contributor to many financial media outlets, a well-respected technical analyst known for her precision in determining market conditions and pinpointing market direction with the highest accuracy. Over the years, she has created a unique and highly successful, simple and easy to follow trading system based on multi-layer price, support and resistance levels, coordinated with proprietary trigger times, market tempo, multi-time frame alignment, synchronicity, divergence, and a proprietary set of rules that enable her and her traders to be very selective, patient, and find high odds trades with ease and laser sharp precision. She has translated complicated technical analysis patterns into simple, understandable, applicable methodology that help traders succeed in a fraction of time and become consistent traders by following her approach to trading. Welcome, Anka, again. Third time on our trading lounge. We're truly honored to have you.
Thank you so much, Sylvia, and thank you, MarketScope, for hosting this amazing show where you broadcast so many amazing traders.
Yes, and from your experience, Anka, I was just doing a video yesterday and I was telling people about your background in investment banking. I don't know if you saw that. And currently managing your own funds at Trade Out Loud. So you can just briefly take us through that journey. And then also the selection criteria that you use to trade stocks. I know you trade a bunch of other asset classes as well.
Sure. So I started trading stocks a long time ago, and this is actually how I came into the market, just trading stock, investing actually. So from the investing side, and I decided to quit my job and take on, trading professionally and trade on my own. So it was a bit of a switch because I came from really high time frames and investing side to a domain where not a lot of investor traders dab into, and that is day trading. So in the meantime, while I was, back and forth, whether, to give up my full-time job and take trading as a career, I decided to swing my accounts and actually seeing the success that I have in swing trading, it gave me the confidence and the cushion to jump into day trading. So I have a very long relationship with stocks and ETFs. And I would say that this is my primary niche. And I love everything that I'm doing. I do have a selection criteria. So over the years, I became very selective because since I still have my investments that I don't have to babysit. I still have some swing trades, which swing trading is a niche between day trading and investing. It's too short for some institutional traders. Day trading is way too short for institutional traders to dab into. And it is a niche where you can find, rapid moves that are happening, bursts of momentum in swing trading. So this is one of the reasons why I dive into swing trading. So this is just a quick little intro. And I do have a selection criteria. So over the years, I found that there are certain stocks that react in certain timings and certain patterns. Also, I like to look at stocks that are heavier traded. One of my strictest selection criteria is to not trade thin stocks that are trading, let's say, below 500,000 shares on a daily volume. And I like to select stocks that are trading definitely 1.5, 1.2 million and higher. So I like to trade the Microsoft. I like to trade the Facebooks, the Twitters, the Ciscos. So all the stocks that have heavy volume. Of course, with heavy volume in a stock, you are not likely to get slipped when you execute orders. I always execute orders on limit orders. So I never jump into the market. I have a thorough process that I go through before I take any kind of trade. So first of all, I look at the market environment. So we have been crossing a very difficult market environment within the last week. This is not coming as an unexpected phenomenon into the market. March is typically like this. And as a professional trader, you expect these kinds of gyrations into the market. So last week we have the quadruple witching option expiration, which typically is very choppy. It is a very choppy environment. So the typicality of this is that usually Monday, Tuesday, Wednesday, you're going to have a range bound market. And then on Thursday, typically you're having a dive. And then a calibration that is coming on Friday, and a lot more muted action into Friday as everything settles. Following this, always following in March, the quadruple witching option expiration, you're going to run into another phenomenon, which is called the month end and the quarter end. Typically, the quarter end is really volatile. It's way more volatile than any kind of option expiration. You encounter this on every March, every June, and every September. So these are I would say the last 2 weeks are a lot more challenging to trade, and you have to have a really good set of rules that you apply. Looking at seasonality, looking at technicals, and select, stocks that are unique. Unique stocks are stocks that have been stronger, for example, in a strong market context, or stocks that are on their own and totally ignoring the market. So I have two selection criteria, if you will: stocks that are on their own, independent from any kind of market activity, and stocks that are following the market. Stocks that are following the market are a bit more challenging in these conditions because they gyrate so much so they gyrate the same way as the market. But I would say, as the selection criteria, I like to select stocks that are widely traded, a lot of volume. And I would say this is a little piece of advice for traders that just dab into trading. Just have a strict universe of stocks. For example, select stocks that are trading from, for example, from $5 to $50. Not to be overwhelmed through a complete scan of stocks, and have a list. For example, for each sector, have about 5 stocks that you run through, and this is going to be your get-go. It's very overwhelming when you're, just dabbing into the market, to perform a full scan of over 6,000 stocks that are, likely to be on your list. Another selection criteria is that I like to trade with the trend. So I'm a trend follower. So not only that I need the heavy volume in the market, but I really want to see a trend following. And if there is no trend, then most likely I'm not going to take a swing trade. There is a methodology to trade sideways market, but it depends on the context, and you may have less odds when you initiate a trade of that trade working out. Another selection criteria is I have a checklist for all my trades, whether they're day trades or swing trades. So I have not only a selection criteria, but a checklist. So a trading plan, if you will. So when I dabbed, and this is a little secret, when I dabbed into day trading, coming from the investment field, I didn't think that I would require a trading plan. So I was like, everything is in here, so I don't need to have a trading plan. It's like everybody, like, oh, I have it, I've got this. Well, in reality, you do need a trading plan, and you need a very simple trading plan that, circles back to that criteria. And you have to have it in front of you, not in a drawer. So you have to have it in front of you. And that trading plan is going to give you the guidelines that you're going to trade by. Say, okay, I'm going to take this stock and I'm going to wait for a pullback into the 20 simple moving average, or, whatever your criteria is. If you have a confluence zone, that is even better. If you have any kind of minor resistance or minor support area, that confirms the trend and it's more likely to rotate off of that area. And then again, position sizing is key. You need to make sure that your position size have enough ammunition for the trading week. I do have a number of trades. For example, I do select about 20 trades. So I have ammunition to tackle 20 trades. Sometimes, you may not find 20 setups and you may only take 5 trades. But that's fine. You have enough ammunition to work out the trades that, for example, you took last week. And if last week you're seeing that, your stop held, but you're getting another rotation that is conducive for a continuation higher, it's fine to add there. Place the hard stop and just let it ride. So coming back to selection criteria, you need to have at least 2 to 3 checkpoints on your list that you can check in order to initiate a trade.
All right, cool. And Anka, you normally have a live trading room. Maybe you can, and thank you for that explanation. It was very detailed. Maybe you can tell us why, as a trader, you do part-time trading and also you're a full-time investor, and how you navigate through that using your trading experience.
Okay, so that's a great question. Not many traders that are, on the investing side or on the day trading side dab into day trading. So I had my long-term money that was working for me, and creating, basically trading my retirement account. However, I needed an income. So when you quit your job, your paycheck stopped coming. So you need to have, a backup plan. So this is the number one reason I dabbed into day trading, and I dabbed into day trading about 19 years ago. And the reality is that day trading is an income producing style of trading. The reason for that is that you get in and out of the market within the same day. Actually, I go for high momentums and high velocity moves. So my timing in the market is not more than 30 minutes into a trade. So about 30 minutes average, it would be about 30 minutes into a trade, because I look for wider targets. I look for, bigger, a little bit bigger time frame that will correlate to my smaller time frame that I trade in. So day trading is an income producing style of trading. At the end of the month, you could pay yourself. And this is actually something that I do in my account. So when you grow your account and when you want to stabilize your account, basically at the end of the month, you pull your profits out and you leave your account intact. And if you want to grow your account, what I do recommend is always reward yourself at the end of the month. It's very important because otherwise, you have no motivation. So, as soon as you see some profits at the end of the month, and it's still, if you want to grow your account, definitely take partial profits out of your account, reward yourself, and then leave the rest in so you can increase your position size, because the more you increase your increase your account size, you will increase your position size because they're strictly correlated. I think it's very important for traders to realize that, in swing trading, you are going to have your money locked into positions. And for example, in a week like this or last week, where the markets have been sideways towards choppy, very volatile, your money's stuck. If you have a long-term account, if you have a swing trading account, your funds are going to be stuck in trades. Because there's not going to be probably profit taking, or if there is profit taking from your unique trading opportunities. For example, I had a stock with Cisco. There was a perfect setup going into last Sunday, and I took the trade. I was like, it was actually the only one that was blasting higher into targets. So you're always going to have, some sort of winner. What I think is very important is to diversify. And when you swing trade, you need to diversify. Diversifying is very important because you're not going to trade, for example, only tech stocks. So you're not going to trade only Amazon, Google, Facebook, Nvidia. So it's very important to diversify. Have some financials, have some home builders, have some in your portfolio, have some semiconductors and so on. So you need to have a very diversified portfolio because of sector rotation. So when this sector rotation happens, your stocks are going to take off. Now, being a day trader, I have to tell you that it truly helps being a swing trader. Because I have constant tap into the market. So I only day trade 2 hours in the morning. I have a trading room that I run from 9 o'clock to 12 o'clock. I do about an hour research before I open the trading room to collect all my intel from the market, news releases, everything that I need for the trading day. Plus, I plot my charts. So primarily I trade the 4 futures indices. I trade the E-mini S&P, I trade the Dow, NASDAQ, and I trade Russell. I also trade commodities, but I like to swing trade commodities. So when I'm looking at gold and silver, because they have been very volatile, not providing a really great day trading environment because of the volatility and the wide stops. And definitely I put them on my swing list. But definitely oil, natural gas, copper, for example, copper is just literally stabilizing at that $4 area, is probably going to want to take off, after we end the quarter going into the next quarter, but we'll see how that goes. So yeah, it helps me a lot because it keeps me really doing a lot of research that otherwise a swing trader would not do. Of course, I do have a lot of help in swing trading. I have a lot of help. I'm using a scanner. I call it my personal assistant or my portfolio manager because it finds trades for me. And like I said, I programmed the scanner for my strict criteria. So to trade stocks that are higher on volume, on a daily volume. Selecting stocks that have that stocks that are trending. So every stock that has to meet my trading criteria.
Okay. So you've talked about having a stock selection criteria, and maybe just to put things into perspective, could you kindly elaborate on why it's important to have to follow a trading system and its importance to wealth building?
It is important to follow your trading system because, you can fall off the wagon really fast. And for example, I have, several setups that I prefer in a market. I have, for example, in an ongoing market, I like to see pullbacks into prior resistance areas that are forming minor support areas at current levels. And these are confirmations that the price is poised, is ready to continue higher. So these are confirming the uptrend. I'd like to have a lot of confirmation on my side. And this selection criteria is very important because it's going to keep you, keep you grounded. It's going to keep you focused. A lot of times traders lose focus and they usually have, they don't have a trading universe. When I started actually swing trading, because I'm coming from the investment field and I wanted to swing trade my own account personally, I had a very strict trading criteria, and this was really back in the day, where stocks were not trading into the 500s or thousands of dollars per share. But I did have an affinity for tech stocks. And I would like to trade, for example, the Intels, the Cisco's. I would like to trade NVIDIA. I would like to trade. I remember swing trading NVIDIA for that little swing, not the high and the low, but it's that swing trading is actually that portion in between the high and the low. It's that middle. And this is what a swing trader is all about. So you're waiting for the rotation, you're getting in, and at the first sign of reversal, you're out. So you're not living through pullbacks, not unless that's your plan, or you want to keep that particular trade for a longer period of time. But typically that is quick in and out in swing trading, pretty much similar to day trading. And it all depends on how you want to trail your trade. I always tell my traders that, everybody can see a setup, everybody can get into a trade, everybody can, take a loss. But the most important thing in trading, in my opinion, is not, the strategy or the setup that you're applying, is your mindset. Number two, I think one of the most important thing is position sizing for your account size. And last but not least is actually having a strong management plan in place. Because if you don't have a management plan, if you don't have a trailing system, which is the art of trading, that keeps you or knocks you out of the trade. So you really need to have a robust trading system. And not only that, but you need to have a really robust trailing system, which I think is the most important, because this is going to actually contribute to the growth of your account. And it's going to contribute to your sanity, because this way, if you have a system, you can trade stress-free. And I'm a true believer in stress-free trading. I day trade every single day, 1, 2, 3, or 4 trades a day. Those are day trades. And I put up about 15 to 20 swing trades in a week. So I'm pretty aggressive in my swing trading. I only invest when the market has an opportunity to. So for investing, you may not find a trade every day or every week or every month. So those are a handful that you are going to hold definitely for a longer period of time. And investing typically refers to 1 to 2 years or 5 years, or depending on the growth and depending on the market environment, you could keep it for 10 years or more. For example, I have NVIDIA in my investing portfolio since it was trading at $36. It was, and I remember exactly when I bought it. I bought it when it was trading, it was actually March 1st or March 2nd, because you always remember your investment, because they're not that many. So you're not holding 100 investments. You probably have a handful. You probably have 5 or 10 or 15 or 20, depending on your account size. But it's so important to start investing and to start trading. And especially for women, more and more women are coming into trading. It's like, women know about Walmart, women know about Target, about Costco, about retailers. Why not get started there? Just buy one share If you want to get your feet wet, I think that's a great start.
Just a follow up on that question. What makes you arrive at a trading criteria? Like, what are the set of rules that inform you that this is a criteria that I'm going to be using and I settle with this criteria?
Okay, so when everybody starts trading, you have to have a center, and you have to stay centered. And the trading criteria is going to actually give you that peace of mind that you're not going to fall off the wagon. You're going to respect your plan. So it's very important for day trading, for swing trading, for investing, whatever it is. You need to have that trading plan. You need to have that really strict selection criteria. So the selection criteria refers to the fact, like I mentioned before, the overall volume in the market. So there are traders that like to trade lower volume stocks, and it's fine if you're doing options trading. But when you are swing trading, you want to make sure that you get in something more, especially in active swing trading, that is, because these active swing trading, you can hold a position from anywhere from, for example, a day. And I have had stocks that I have gotten into and they achieved all my targets in one day. And they have, for example, have reached massive resistance. And I decided, you know what, at the first sign of reversal, I'm going to be out. And I was out in a day. There are other stocks in which you're going to stay, for example, for a month or 2 months or 3 months. You're going to stay in that particular stock until you either meet your goal or you're going to get stopped out. There's no such thing as and that's why you need a selection criteria. And that's why you need to be very focused and have a trading plan, because you need to respect it. And we're not so, as a retail trader, we're not, we are our own bosses. So we need to have our own guidelines, because if not, we're all over the place. So we need something to keep us grounded, and having a trading plan and having a trading system and having guidelines is the only way that can keep us grounded. So I was saying earlier that positions are held depending on the stocks movement and on the market environment, anywhere from a day actually to 2 weeks or more, or even a month. I have, for example, stocks that because of the lack of movement, they have never violated my stop, and they have been, stuck in a rut actually since February. So I still have stocks since February in my account. That doesn't mean that I'm going to take myself out just because I'm bored. You never do that. And I find that many traders do that. Running a trading room, I have all sorts of traders from all walks of life with different psychologies. And I try to teach them that in trading, we need to be in sync. Everybody needs to be in sync, and it has to be disciplined. Because if you're in a trade, for example, you got an ABC trade at $50 and 2 weeks later is at $50.05. So it hasn't done anything, but it hasn't violated your stop, and it hasn't achieved your target. That's not reason enough to take your money out and walk away from it, because the moment you do that, that stock is going to wake up and is going to start going. So I think it's very important for traders to actually be very focused on the stock that they're trading and respect the plan for each and every single trade that they take. Discipline is very important in trading. Discipline and patience. There's no such thing as, I don't have patience, I'm jumping in. It's like you're jumping in because you're not educated. So when you're not educated, you have no idea what to expect from the market. You have no idea whether you need to wait and what to wait for. So the reality is that you need to wait for a setup. You have a setup, you have a trade. You don't have a setup, you don't have a trade. It's very simple. So once you learn how to create these guidelines for yourself, and all these guidelines you can create through your own personal education, you are responsible for your growth. You are responsible for identifying elements into the market. You're responsible for doing all the research before you get into a trade. And once you have everything all set, you're going to see that discipline, patience, they're all going to come natural. Having a trading plan is going to come natural. Having a system is going to be natural. And it's not hard. You can start with a very simple system. You can start with something easy as, looking for a pullback in an ongoing trend that comes back to a 20 simple moving average. You're going to wait, for example, if you're trading the daily chart, you're going to wait for a technical rotation, for a buy setup, if you will. You're going to have a plan and say, hey, I'm going to buy it when the price is going to take out the prior high, because that confirms the rotation. So then this is a trading plan, and you measure the distance between your entry and a stop. You determine your position sizing, and based on your account size, you're going to say, you know what? Yeah, I could take it with, depending on the market environment, I could take it with my full size, or I'm seeing the environment was so volatile, and we still have been trading under the pandemic environment. So with that being said, position sizing should be accordingly. For example, on quadruple witching option expiration week, or going into the end of the month, I always trade half of my original size. Why? Because you're more exposed to risk. Risk means the possibility of stopping out of the trade. So I don't want to incur a lot of stop outs in case that is going to happen. And then again, circling back to this, I think it's very important that when you select the stock that you're trading, when you select the stock that you're trading, it is very important that you look at the context, at the market environment, because if the market environment is sideways, then you have a 50-50 shot at that trade. So that means that you have 50% chances of stopping out of that trade. So that would be it.
So there are many strategies out there, and I'm just wondering, how do you arrive at one strategy? Like, are there metrics you look at, like win-loss ratios, winning streaks, and also when do you think is the right time to change a strategy? Is it maybe after a losing streak, or when do you think is the perfect time to say this strategy is not working for me, I need to change it?
Okay, that's a great question. I think every trader is responsible for keeping a journal, what's working and what's not working. And keeping a detailed journal is going to tell the trader what strategy works for him and what strategies does not work for him. So for example, in this journal, you have to have really detailed explanation. It's going to have to be in like an Excel sheet, or you could have like a journal, like literally like a book, like a notebook. But it's very important to have like these different areas that you need to incorporate in a journal, like the date. If you're a day trader, you definitely have to say the time of the day when you took the trade. For example, you took the trade in the morning, you took the trade in the afternoon. What was the time? Was it a reversal time? Was it a trigger time? Was it a time when you had pending news? So the timing is very important for day trading. For swing trading, not that important. You could take a trade any time of the day or night. For the other thing into the trading journal that is very important is to have a detailed explanation. So for every stock or whatever you're trading, Forex, futures, it doesn't matter. You need to have a detailed explanation of how that trade behaved. So that's not a lot. It's just a sentence saying, hey, I took this trade at, for example, at 10:30. You could see it from the record. And you could say it triggered and then it failed, or it triggered and continued. And the strategy that you applied, whether it was a buy setup, whether it was a breakout, whether it was an inside bar, whatever the strategy it was. The other thing that is very important is to write down obviously the instrument, the direction, whether long or short, the entry, the stop that you applied, so the exact numbers, and also the targets. Each trade has to come with at least 3 to 4 targets, because when you're getting into a trade, you have to be well prepared, because if that trade is going to start taking off immediately, you want to make sure that you are covered from all bases and you have target levels that are available on your charts and that you can identify. by having an ample journaling system, it allows you to, at the end of the month, to say, hey, I'm a day trader, or I'm trading gaps. I'm noticing that, gaps are not working for me. I'm noticing that we're having, I'm better at trend continuation, or I'm better at certain times of the day. So then, therefore, at the end of the month, or a much thorough evaluation is at the end of the quarter, because the quarter is very important for you, because the quarter has you, pretty much crossing over a full cycle, earnings season, FOMC meetings, ECB meetings, whatever they may be. So it's a full cycle of news. It's a full cycle of earnings. And then, at the end of the month or at the end of the quarter, you look through your journal and you go like, okay, so gaps, every time I took a gap, I failed. So that's not going to work for me. Or every time I took this strategy, it didn't work for me. So that's an easy fix. So you just cross it off the list, and you cross it off. You just forget about it, and you focus on what is working for you. If buy setups or breakouts are working for you, or if you only need one strategy to make it work, to actually make money in the market. You don't need a plethora of strategies. We actually teach 10 strategies, out of which on a day-to-day basis, I think we only use just 1 or 2. So the rest of the strategies are great to have in the toolbox. But the reality is that narrowing it down, you're going to focus with one strategy. So you're combing through your portfolio, and you're just looking and seeing where you're good at, where you're really strong at, and you're ditching everything that is not working for you.
All right, Anka, I think you have already answered the question on the holding time period between like a day to even a month. So maybe right now you can take us through a sample of your live trades, and then we can get right to your presentation in the interest of time. Yeah.
Do you want me to share a chart?
Yes, you can share your screen.
Okay. All right. Can you guys see the screen?
Yeah, sure.
All right. So this is, for example, I have Cisco. We could talk a little bit more about the market condition right now, because I think it's very important to have, a really good idea of what to expect going into the end of the quarter. But this is a stock that I actually took for this week. It was a really nice winner for us. So when I perform a technical analysis, I always go from to the highest time frame. The highest time frame, because again, every single stock that you take has to have really strong a really strong technical, not only from the smaller time frame standpoint, which is, let's say, the swing trading, but it has to have like a really good macro solid look. And you have to make sure that everything is in sync. So I want to make sure that when I do my multi-tier analysis on multiple time frames, I have all the time frames in sync. So that means that if, for example, I'm having the monthly chart that is declining and it's not robust and indicating that it has a possibility to continue higher, then I don't take the trade. So I have to have all my timeframes that are going to be in sync. So I start always my technical analysis with the monthly chart. So the monthly chart for me is very important. And I use very simple indicators on my chart that are available. For example, for anybody out there, they're free to use on the True Believer and really nice, clean charts. I don't like to have a lot of indicators on, but I do use the 20 simple moving average, which is very important for my trading. And I would say that if I have like two favorite moving averages that I use, those would be the 20 simple moving average and the 200 simple moving average, which is this one. The red one right here is the 200 and the blue one is the 20. So just to keep it so super simple. I like to look and identify trades that are trading definitely with the trend. So this is a massive trend that we have on, even with the gyration that we had into last year because of the pandemic. But this stock has recovered considerably. So I actually hold this for, hold this in my account from way back in 2016. That was a big buying point. 2016 was a big buying point where we saw a lot of stocks take off in the market. So I'm looking for pullbacks, and I'm looking for the price to sustain this 20 SMA area, or at least to stay a little bit above it, even if it's testing it, right? Because it's not, it's not a literally concrete sidewalk, right? This moving average, so it oscillates a little bit. So I like to see pullbacks, and I want to see rotations into this. And I'm looking for strength, and especially now that we're approaching the end of the month, I like to see a lot of strength going into the end of the month. So this is a pretty good indication that going into April, this is going to have a really solid performance if it's going to start moving higher as well. So the monthly chart is very solid. You can see here that it's trading above the highs of the February. So it's trading above the February highs, it's taking off. So going into April, if we're going to take off the high of March, and that's going to be next week. So that's going to be next week. So at the end of next week and going into April, this is going to have a solid move for higher, most likely into the $58. I also like to look at the weekly, and I like to take trades. Most of my swing trades are in sync daily and weekly. So I was looking at this little pause of momentum that we had here, this little doji that took out the prior high, took out all this mess that we have from the left-hand side. And you can see that actually the first time in a very long time, and this is since 2019, that we actually cleared all this chop that we had here. So if I was to draw a line here, it actually had this peekaboo high, and right now this is going to become the pullback to area. This will become the minor support for ongoing price action. So that's $50.30, and from this point on, I go on my daily charts. Actually, this was a trade that I initiated a little bit earlier. So this was my starting point here into the $49, and you could see how it nicely rotated off of the 10 simple moving average. The 10 simple moving average is helping a lot of dynamic traders identify these really nice setups that are likely to power trend for a few days, let's say a couple of days, or even a few days. So we now you can see that it created a new high, it pulled back, and now we are looking at this as a possible support area. We also have the temporary shelf into the $49.50. What I truly believe is that, and I don't trade anything without the market context. So I'd like to look at the SPYs. I do a thorough analysis. And again, my analysis is being done based on relative strength, relative weakness, based on seasonality, because we know that seasonality plays such an important role, especially as we're going into the end of the month. We are seeing a lot of divergence happening into NASDAQ, and a lot of traders were wondering, say, what's happening with NASDAQ? NASDAQ, the Qs, comp of NASDAQ futures, they're behaving so erratically. The seasonality points that way. They always trade like this for the month of March. If you have been trading long enough, you would have realized that. And if you would have kept a journal, you would have realized that, the NASDAQ has a tendency to be very choppy into the month of March. On the other hand, the Dow historically is a bullish into the month of March, and then the S&P is trying to follow a little bit the Dow into that perspective. So knowing all that, knowing seasonality, you know how to select your stocks much better, and you know what to look for. So the focus, for example, for March would be to select stocks that are for example, that are trading within the Dow. Stocks like, for example, like Boeing. You're looking for technical spots that are going to take higher. Financials, which were ripping higher, and they were ignoring the market in general, but they were trading in sync. And because you have JP Morgan, you have Citi, you have Bank of America, Goldman Sachs, that are all within the Dow, they were so strong. That's what created the relative strength going into the Dow stocks. So therefore, if you're a trader, you don't want to make your life hard and say, I'm going to fight this NASDAQ because I do love tech stocks. No, you have to go to the stocks that are going to offer you that that opportunity to actually create growth for your account. So you're going to go towards financials. You're going to go towards stocks that, for example, 3M, Honeywell, Walmart has started to take off a little bit, and keep these stocks in hand. Also, there's another thing that is very important that is about to happen next week. At the end of each quarter, everybody can expect the price of certain stocks that have been overwhelmingly bullish to continue higher. And this is a window dressing effect. Window dressing effect is very important, and it's a real thing, and it's happening into the market. It's more pronounced as it's happening into the end of the year, but definitely this is a phenomenon that is happening into the end of each month. So what happens here is that it's a very simple process. Basically, portfolio managers are getting rid of all the underperformers. For example, if they held a position into I would say a stock that hasn't performed well within the last quarter, they're just selling it, and they're jumping into high flying stocks. For example, they're jumping into a Facebook or Twitter, or they're jumping into Microsoft, something that was very solid going into the last quarter, because they want to dress up their portfolio. They want to look smart, right? So they want to ditch the losers and hop into the winners. By doing so, in the last few days, couple of days to few days of the month, you're going to see that these stocks that have been outperforming the whole entire quarter are just going to continue to move higher. So if you're a technical trader and if you're saying, oh, I'm going to buy this stock because it was, it's really on a steep pullback, it has been underperforming, that's not going to be a good pick. Just reserve that stock for the beginning of the quarter, because possibly it will be picked up in the following 2 weeks of April. But now's not the time. Now focus on the winners, because these winners are going to start moving higher, and stocks that have been lagging, they're just going to be dumped. So going into the SPYs here, this is the macro to micro look. This is the monthly bar. It's leaving us a little bit of tails on the upside and to the downside. So it's very evident that going into the end of the month, and always I analyze my charts going into the end of the month, especially on the last day of the month, which is going to be next week. It's also going to coincide with the last day of the quarter. So I also look, so this is another thing that I do because it's coming from the investing side. So it taught me to look at quarterly charts, for example. So take a look at this quarterly chart right here. So every candle represents 3 months of trading activity. This is massive. So you can still see that we have an incredible size of green here. So that means that the bulls are in charge still. Buyers still are interested in this, in the SPYs right now. So we have a high, we have a low. Definitely the theme for the following quarter is to hold this low of 364.35. As long as we hold it, we're going to start pressuring to the upside, and then you can start. And this quarterly analysis, I like to perform over the weekend, where when the quarter ends and after the quarter ends, because you need to have like all that information available to you. So the monthly chart is a little bit a little bit into an indecision zone, and that is because so far month is not over yet. So we still have 4 trading days. We have today, and we still have 3 trading days into next week. But as long as we keep the high, the low here into the 371.30, I think we are still going to be intact, and we're going to be good. If we breach this level, we're going to start seeing some pullbacks, and the pullbacks are likely to happen into the 355. So everything is very technical. Once we are done with the monthly chart, I like to go to a weekly chart. So weekly chart is going to be very important. And here on the weekly charts, like common sense. It's like, look at where the price is trading at and see what was the tendency on this particular time frame. What is the tendency on all time frames that you're trading? So if you want to trade or you want to take a trade off the weekly chart, you want to make sure that you evaluate and see what's going on. So what I'm noticing here is that number one, my moving averages are fanning out. So which this is a sign of strength. It's a sign of trend continuation. I'm also noticing that that the SPYs here are testing the 10 EMA. And I'm also going back in price and I'm noticing that, hey, there's a very strong correlation between where the price is, how the price is following this 10 EMA, right? So this is very interesting because this is actually going back all the way into November. So you can see it right here. This is October, November in 2020. When we had a 1, 2, 3 pullback to the 20 SMA. So we noticed that here we had price gyration that took the price lower. And of course, there are certain factors that influence this. And then we had a quick pickup from the 20 SMA. So I'm noticing that the overall rule for the SPYs here is to follow the 10 EMA and is to follow the 20 SMA. And then again, I look to the price action. I'm noticing, okay, so we had a pretty similar reaction here. So I had a 1, 2, 3 pullback to the 20. I had a 1, 2, 3, 4 pullback to the 20 and also into the minor support because these highs, this resistance is creating minor support for this price action. So far it's 100% technical. So this is something you can't make up the technical analysis, and technical analysis is such a beautiful thing, but technical analysis is not enough to identify a really good trade. You need to know, setups, you need to know risk, you need to know a whole lot of things. All right. So for now, current environment, let's say this is Friday, right? The more we stabilize on Friday, and if we're going to remain sideways into Friday, because I'm seeing futures right now are really relatively sideways right now into the mini S&P. So if we remain like this, we're going to be bullish above this week's high. So over 394.07, we're going to be bullish next week. But if we break below the low next week of 383.90, we're going to be into a pullback phase. And the pullback phase is likely to take price where? Into the 20 SMA. How do I know that? Well, because this was technically on the chart before. So we noticed that every single time in the past where the price pulled back to the 20 SMA. So take a look here. We had a revisit here. We had a revisit here. And this is, well, actually the pandemic low that it was trying to calibrate. And then you take it one by one, and then you take it to the daily chart, depending on how fast you want to achieve your targets and what kind of risk you want to apply. You could trade the weekly charts, you could trade the daily charts, or you could even trade the hourly charts for more aggressive moves and still consider it like a really good, really short-term trade. So for example, here you put your you ask yourself the same questions. So you ask yourself, okay, what was the price behavior? So after creating a high, you got to pull back, you got to pull back into the 50 SMA. When was the last time it happened? So it happened right here. So you can see that it came back and rotated off of this 50 SMA as well. When was the last time it happened? So you can see that the price repeats itself. So you have a certain repetition in the pattern. So it's likely to pull back and rotate off of this levels. Now, I'm going to tell you what's going to happen today. If today, throughout the trading day today, we're going to trade above $390.55, we're going to start moving higher. Probably we're going to test the 393 and possibly even go a little bit higher into the 395 if we have really strong momentum and if we have reasons to move a little bit higher. Price action tends to be a little slower as we're going into the end of the quarter, and volume also drops a little bit. So you have noticed that the volume is probably a little bit decreased as we're going into this end of the quarter. And then if you want, a very aggressive type of trade, for example, you could go as low as a 1 hour for a swing trader, and you're going to look for technical locations where you could actually initiate trades from. You're going to look for hourly pullbacks. Exactly. You're going to look for the same criteria that will look on higher time frames. You're going to look for the same criteria on smaller time frames. So this would be a rundown analysis that I would do on every stock or every index. I actually start all my analysis every single day with the indices because I want to know what's under the hood. So where's the SPYs? Where's the Dow? Where's the Russell trading? How is NASDAQ price action behavior? What are the trends? Is it violating the trend? Is it respecting the trend? So I'm looking under the hood to see all of these heavy indices where they're trading. And now actually we're having a lot of strength into Russell right now. Russell and the Dow, I see them popping right now, right before the market opens. We still have an hour and a half until the market opens. But that would be my trading criteria.
Would you kindly elaborate more on seasonality and how you use it to determine which index or which group of stocks to pick? So for example, the Dow has been outperforming the NASDAQ, for example. So how do you know when to switch and start focusing on NASDAQ stocks based on seasonality and such?
Okay, there are different websites. Yeah, there are different websites that you can access. And if you search seasonality in stocks or seasonality in indices, you're going to have many websites. I don't want to advertise any website here, but there are many websites that you can go to, and you can find seasonal charts, and that is a great place to start. You could go and find out the seasonality for the indices, for example, because this is something that I'm very interested in. If you have been trading long enough, you know when these the seasonal behavior. But you look at those technicalities, and they have a record of the past 20 years. So that's a really good compounded time into the chart for a seasonal move. And they're showing you exactly how this chart is and how this chart is displayed. It's going to show you exactly on a month. They're basically daily charts that I look at. So I look at a daily seasonal chart, and you run one by one through these scans. And it's going to show you it's actually so cool because you're going to see, for example, March, you're going to see June, you're going to see September that are going to have a certain price behavior. And all you have to do is carbon copy that to your chart. So keep that in mind. The strength or the weakness of a certain stock or a certain index throughout the trading session. Of course, the year end has its own typicality, so it's way different. You trade it way different than you trade the rest of the year.
So thank you for that. We have a couple of questions from the audience. Okay. Esther is asking, hi, how often do you monitor your swing trades, e.g. every 2 days, weekly?
Yeah. Every day. Yes, I monitor my trades every day because you want to make sure that you're lifting your stop a little bit higher. You want to trail. So I basically allocate, I would say about 10 to 15 minutes a day. I allocate to my existing swing trades.
Okay. And the next one is, do you, Anka Wanjiku is asking, do you trade Forex at all? Or do you look at other asset classes apart from stocks and commodities?
Yes. Every weekend, I do a rundown of futures. I do commodities. I do a rundown through commodities because I want to know if there's a trading opportunity there. I want to be there. I also look at currencies. I look at the dollar, obviously. I look at the euro. I look at the yen. There may be some really great trading opportunities there. And of course, everything is correlated in the market. So yes, I do look at Forex. I mostly look at individual currencies because I find it, more helpful in the line of work that I do. But I look through, I go through bonds, I go through everything.
Yeah, the last question is from Wanjiko Munuti, and it's in line with accessing your trading room. So maybe Anka, thank you first of all for that presentation. It was detailed and thorough. And so maybe you can tell people as we conclude how to get in touch with you, your trading room, your website. I know you're active on Twitter, LinkedIn, and Facebook, where they can access your work. And then maybe you can tell us, I think we ran out of time, but you would have shown us maybe an example of a Forex chart, for example, if you don't mind doing that. So
sure, absolutely. Okay, so we're going to talk about the euro dollar. In fact, we did talk about this a little bit in the trading room because I was watching the euro. And I said that the euro is going to start flushing at the beginning of the week. It's just exactly what it's doing right now. So from the monthly perspective, you could see that, we caught a little bubble of air. This is quite a little bit of a tradable void that we have here into the 10 EMA. And we saw the rotation down. So it all goes down by momentum trading. So it takes the low, it's going to continue lower. If it trades weak on the month, it's going to end weak on the month. Going into next week, it's just probably going to continue lower into the next level of support. So right now it has this downward move, and it started actually by breaching this 1.1943. Then for the week was pretty conducive. This is one of the strategies that I teach my traders. This is an inside candle. It's going to be bearish below. It's going to be bullish above. So it's a very simple strategy. You can see here that, we have a mini downtrend on smaller time frames that is reflected on a steeper pullback on the weekly chart. We have breached this inside candle low, 1875. We started to come in a little bit more. I'm seeing a pullback at least into the 1690 to 1680 area. And if this is going to happen, this is going to be the next rotation point. So for now, this is very weak. It may continue its weakness going into Monday, Tuesday, Wednesday. But on Wednesday, it may have a decision point as it's coming into these levels that I mentioned. We're going to be bullish back again. And if you guys want to reach out, like Sylvia said earlier, it's tradeoutloud.com. You can find all information in regards to trading room education. Everything that we have is on the website.
Once you get to that level, the 169 area, and we have a rotation, how do you confirm that this is actually a rotation and I should get into the trade?
You're going to have a technical rotation. So a technical rotation is, for example, I'm going to give you an example here because we don't have it yet here. Let me see if I can pull up something else here. I'm going to show you exactly what I'm looking at. Okay, so we have the downward move right now. Okay, so the next thing that you're going to probably want to see is another surge in price. You want to revisit this support level right here. And we also have the 50 SMA that I'm using. Okay, so let's say this is a candle. You wait for the candle to go down or a revisit into this area. The rotation point is going to come. Nothing comes without confirmation. You're going to wait for the rotation to happen. You want the buyers to take out the prior seller's high. So you want to see the price trading above this prior high, and this is going to give you confirmation that the price is ready to continue higher.
All right, Anka, I think we've come to the end of the webinar. For guys who are still asking questions, you can get in touch with Anka through her website. In case, I know Anka is very open to taking questions now and in the future. And thank you guys for today's webinar, Anka. I think you have done a good job. And we're out of time by 5 minutes. So thank you also for being gracious enough to extend your time with us. So we'll let you go and do your trading as you end the week and have a good one. We'll see you in the next one.
Thank you so much, Sylvia. Thank you, everybody. Thank you, Marcus, for making this possible. Thanks for having me.
All right, cheers. Also, we will link your website to the show notes as we send the edited video next week. So it's a wrap and goodbye.
Thank you. Have a good weekend, guys. Bye.
All right, cheers. Bye.
Thanks guys for tuning in and sticking with us to the end. We hope you have learned something new. I would like to appreciate Scope Markets for sponsoring this webinar. Remember, you can open a live trading account with Scope Markets and apply the lessons shared by the guest in this webinar to your trading. Many thanks to our guests for speaking to us. We'll be open to have you in the future. Till next time, goodbye.